Hey there. Ready to dive into the world of investment, see where things are headed in 2025? It's going to be a wild ride. The whole global scene is changing faster than ever. We're not just picking stocks here. We're talking about understanding all those forces that will really shape the entire economic landscape.
Yeah, you got it.
Shifting powers, geopolitical hotspots, all that fun stuff.
Exactly. The old invest everywhere approach.
Yeah?
Yeah, that's out the window. We're looking at a world that's fragmenting by 2025. The US, Europe, Asia, each becoming its own investment universe with its own risks and rewards.
Fragmented world. Okay, got it. So let's start with China. They've been such a powerhouse for so long, but now things seem shaky. What's the deal?
Right. Remember when everybody thought China's growth was unstoppable? Well, things have changed. They're dealing with a massive real estate crisis, deflation, and weak domestic demand. They've even tried to stimulate the economy with rate cuts and cash injections, but hasn't been enough to stop all that foreign capital from just fleeing. And this is where it gets really interesting for investors. Imagine a wave of cheap Chinese goods flooding the market. Everything from solar panels to electric cars.
Oh, wow.
That's what could happen as China tries to cope with overproduction and a shrinking domestic market.
Okay, so potential bargains, sure, but also potential disruption to global industries. It's a lot to think about. What about the U.S. then? How are they handling all of this?
Well, the U.S. seems to be defying expectations. They're on track for what economists call a soft landing, taming inflation without tanking the economy.
Yeah.
Think of it like a tightrope walk. And so far, they haven't fallen off.
So slow and steady wins the race, huh? But are there any danger zones we need to be aware of?
Well, there are always risks, right?
Of course.
One thing to watch out for is a resurgence of inflation. If the U.S. economy gets too hot, the Fed might have to raise interest rates aggressively, which could trigger a recession.
Makes sense. It's a balancing act, for sure. But with all these global shifts and uncertainties, what does it even mean to make a good investment these days in this climate?
Here's the thing. New investors often chase high returns, but experienced investors, they know it's about more than that.
Yeah.
It's about profitability, yes, but also the probability of success and managing your risk.
So it's not just about making money. It's about being able to sleep at night.
Exactly. Investing should help you build wealth, not give you ulcers. In a world that's as unpredictable as ours, you want to look for investments that offer stability and at least some degree of predictability.
Okay. Low stress, high reward. That's the dream. But where do we find those kinds of opportunities in 2025?
Well, that brings us to a very interesting option.
I'm listening.
U.S. real estate.
U.S. real estate. Really? I'm intrigued. Tell me more.
Think about it. Real estate is a tangible asset. It's not just numbers on a screen, it's physical property. You can insure it against major disasters. And it's inherently connected to how stable the U.S. economy is.
So if the U.S. economy does well, real estate values go up.
Exactly. Plus, you have the potential for rental income, a steady stream of cash flow, and long-term appreciation. It might not be as flashy as, say, tech stocks, but it could be a much smoother ride.
Okay, I see where you're going with this. But let's talk about some of the things that might be on, a potential investor's mind. What about those stock market corrections we hear about all the time? Wouldn't real estate be affected too?
Sure, but here's the key difference. Real estate is less volatile than the stock market. It doesn't swing wildly with every news headline. And remember, we're talking about income-producing real estate here. Properties that generate rental income, that provides a level of stability even when the market's fluctuating.
So it's not about flipping houses or trying to time the market.
Not at all. This is about long-term investment, building wealth gradually over time. You're essentially becoming a landlord, providing housing, which again ties back into the strength of the U.S. economy.
Makes sense. You also mentioned insurance. So even if there's a natural disaster or some other unexpected event, I'm protected.
Yeah, that's the idea. You can insure against those worst-case scenarios, which you can't really do with stocks or bonds.
Okay, I'm starting to see the appeal. Tangible asset, steady income, protection against disaster. Sounds pretty solid. But what about the numbers? What kind of returns are we talking about here?
Well, the properties we're looking at typically offer returns between 6 and 10%, and that's just from rental income.
Wow.
On top of that, you have the potential for appreciation as property values increase over time.
6 to 10%. That's pretty attractive, especially compared to the low interest rates we've seen in recent years. So it's a double whammy, steady income plus potential growth. But let's play devil's advocate for a minute here. What are the downsides? There's got to be a catch.
Of course. No investment is without risk. Real estate is illiquid. meaning it can take time to sell if you need quick access to your capital. And there are management costs to consider. Things like property taxes, maintenance, dealing with tenants.
This is not completely passive income. I might actually have to, do some work.
Well, you could hire a property manager to handle the day-to-day, but that would eat into your returns. It's a trade-off. But overall, it sounds like a viable option for someone looking for stability and long-term growth, especially given all the global craziness we're facing.
Right. It's all about aligning your investment strategy with your risk tolerance and your financial goals. If you're a thrill seeker, stick with the stock market.
Yeah.
But if you value stability and predictability, U.S. real estate might be the ticket.
Exactly. And we haven't even touched on the potential tax advantages of real estate investing.
Oh, there are tax advantages too. It's really starting to sound interesting. But before we get too deep into the weeds, I'm curious, are there any other investment options people might be considering for 2025 besides U.S. real estate?
Well, some investors might still be drawn to the Asian market, hoping to catch China on the rebound.
So kind of a high-risk, high-reward type of thing.
Exactly. There's also the allure of emerging markets, in Africa, South America. They offer diversification, but they come with their own set of risks too, of course.
Right, of course. And what about the good old stock market? Are people completely writing off stocks in 2025?
Not necessarily. Savvy investors are looking at specific sectors that are poised to thrive in this new landscape. Think renewable energy, artificial intelligence.
Yeah.
These are areas with huge growth potential, regardless of what's happening in the broader economy.
So it's more about being strategic and selective than just throwing darts at a board.
Absolutely. The days of blindly following the herd are over. It's about doing your research, understanding those global dynamics, and making informed decisions that really align with your financial goals.
Solid advice. But you mentioned earlier that the U.S. seems to be doing well economically, and we all know things can change quickly. What are some potential curveballs that could kind of throw things off course?
That's a great question, and it's something every investor should be thinking about. One potential risk is a resurgence of inflation. If the U.S. economy overheats, the Fed might have to slam on the brakes, with higher interest rates.
Yeah.
And that could trigger a recession.
So keeping an eye on inflation is key. What else should we be watching for?
Another wild card is the political landscape. The upcoming elections could create uncertainty, volatility in the markets, depending on the outcome, and any potential policy shifts. And then there's always the risk of unforeseen events, a global pandemic, a natural disaster, a major geopolitical crisis.
Yeah.
These things are impossible to predict, but we have to be aware that they can happen and have a plan for, mitigating the impact.
Right. It's a lot to keep track of. But it sounds like the key takeaway is to be prepared for the unexpected.
Exactly. Investing in 2025 is going to require flexibility, adaptability. You have to stay informed, adapt to changing conditions, and always be thinking a few steps ahead.
Well said. We've covered a lot of ground today, from global fragmentation to U.S. real estate and everything in between. It's been a whirlwind tour of the investment landscape in 2025.
And remember, this is just the tip of the iceberg. There's always more to learn, more to explore. The more informed you are, the better equipped you'll be to navigate this complex world of investing.
So to our listeners, don't just take our word for it. Do your own research, talk to financial advisors, and most importantly, make investment decisions that are right for you. Don't get caught up in the hype. Don't follow the crowd blindly.
Right. Be an informed investor, not a reactive one. Remember, investing is a journey, not a destination. It's about building wealth over time, making smart choices, staying the course even when things get bumpy. And don't forget to enjoy the ride. Investing shouldn't be a source of stress. It should be a tool for achieving your financial goals and living the life you want.
That's a great way to end it. Enjoy the ride. Well, that's all for today's deep dive into the investment landscape of 2025. We hope you found it informative, insightful, and maybe even a little bit entertaining. Until next time, happy investing.
Absolutely. And you know what they say? The best time to plant a tree was 20 years ago, but the second best time is today.
I love that. So true. Well, I think we've given our listeners a lot to think about today, from those global headwinds to some potential bright spots. It's a lot to digest, but hopefully you're feeling more informed and ready to tackle your investment goals for 2025.
Remember, knowledge is power.
Right.
Especially when it comes to investing.
Couldn't agree more. And hey, if you found this deep dive helpful, be sure to check back for more. We're always exploring new topics, digging into the trends that are shaping the future.
We'll see you on the next deep dive.
Until then, happy investing.
Absolutely. And you know what they say? The best time to plant a tree was 20 years ago, but the second best time is today.
I love that. So true. Well, I think we've given our listeners a lot to think about today, from those global headwinds to some potential bright spots. It's a lot to digest, but hopefully you're feeling more informed and ready to tackle your investment goals for 2025.
Remember, knowledge is power, especially when it comes to investing.
Couldn't agree more. And hey, if you found this deep dive helpful, be sure to check back for more. We're always exploring new topics, digging into the trends that are shaping the future.
We'll see you on the next deep dive.
Until then, happy investing.